Hi guys, and welcome to another week of State of the Market. As per usual, I am Marc Vittori and I am joined by my lovely co-host Jennifer Budol. And this week we do have another jam-packed episode on the latest findings on housing stress in the nation, outer suburbs, and childcare centres growing in investor realty. The 5 electorates with the highest levels of housing stress have been revealed as affordability ramps up as a key issue in the coming federal election. Following the release of 16 recommendations to improve housing affordability, the coalition claimed planning and supply was the issue, while opposition said that this was a narrow focus. House prices increased at a record rate during the pandemic, while wages remained relatively stagnant. The PCA found 70% of voters feared younger people would never be able to buy a home, believing the great Australian dream was out of reach. Meanwhile, between 50% and 75% of renters were living in housing stress, which was particularly felt in outer suburban and coastal communities, according to Everybody's Home.
Yeah, good to know. More on this topic, rental stress was between 40% and 70% across the majority of seats in Sydney, Melbourne and Brisbane. Research shows the impact of housing affordability had a vast difference across the generations, with 62% of baby boomers buying a home by the age of 30 compared to only 1 in 3 millennials. This came despite record low interest rates, which are expected to hold until after the election. PCA Chief Executive Ken Morrison said, with an election only weeks away, the figures should rightly put pressure on federal parties as well as the state, territory and local governments. Morrison stated that our research shows 4 of every 5 aspiring homeowners actually believe the dream home of ownership is unachievable, which you'd have to say is incredibly disheartening. This comes to show that incomes are not keeping up with the surging housing costs at the moment, which is really true. It's a bit of an interesting topic we'll talk about next time as well. So wealth manager Australian Unity is making its first today in the childcare sector, launching this month a new fund seeded with 6 facilities worth $30 million and another 12 centres in due diligence. The Australian Unity Childcare Property Fund aims to expand to $250 million within 3 years, according to equity raising presentation. Australian Unity itself has invested $20 million into the vehicle, while next month's raising is targeting $30 million, including the 12 properties under due diligence. They are in Adelaide, Melbourne and Perth and worth close to $75 million. The combined portfolio will provide for more than 1,650 childcare places nationally. Average lease expiry for the 6 assets is close to 15 years. Childcare centres are growing in investor popularity, with the sector enjoying strong bilateral support, said Ryan Banting, General Manager for Social Infrastructure at Australian Unity. They will also play a key role in Australia's economic prosperity in supporting parents' return to workforce, providing families with access to important early childcare education resources, as well as creating opportunities for families across the community. Investors can expect a dividend yield of 5.5% and 6.5%, with an internal rate of return at 10%, according to fund documents. With $5 billion of real estate funds under management already, Australian Unity controls assets across the healthcare accommodation, retail accommodation and industrial and office sectors. Yeah.
Quite a lot there. Underpinned by federal government support for childcare, the sector has proven resilient even through the disruption of the past 2 years, and is generating close to $14 billion in revenue annually. That said, revenue stream has in turn created an opportunity for real estate investors, with about $28 billion worth of investment grade childcare centres established. There are about 8,500 national long daycare centres. Further consolidation in property ownership is expected, with the 2 largest childcare landlords, both ASX listed, Charter Hall Social Infrastructure Fund and Arena REIT, owning just 7.5% of the market. Research estimates that an additional 3,000 childcare centres will be needed over the next decade to cope with the growth of 2 working parent families, as more women look to enter or rejoin the workforce to reinvigorate their professional career, which is something we talk quite a lot about here in JL.
Yeah, I see that there's a lot of upgrades here with the women employment as well. So guys, we hope this was an insightful video for you guys to watch over the next week. We also hope that if you do have any questions, you can reach out to Marc or myself. And if you need anything, just give us a call. Until
Thanks,
next
guys.
week.